get business credit, use business credit. Well, there's 8 things that business credit will do for you that are very powerful that honestly most entrepreneurs don't even know. As a matter of fact, it even gives you an insider advantage just to be able to know what we're going to talk about today. It definitely gives you an industry advantage. So whatever you're doing, a lot of your competitors don't know statistically about what we're going to talk about today. Matter of fact, statistically, 90% of entrepreneurs know nothing about business credit at all. So you're going to walk out of this and know 8 powerful things that business credit will do for you that you probably didn't even realize, some or all of them, especially the last one that we're going to talk about today. And this is going to give you a huge competitive advantage, because what's going to happen is it's going to give you the ability to understand how powerful business credit can be, the ins and outs that you're going to really need to know to be able to start getting business credit and using it wisely. And again, it's going to help you jump ahead by giving you access to a lot more money than anybody else in your industry can even really access. So what are these 8 things, these 8 reasons that business credit matters? That's exactly what we're going to talk about today. If you stick around at the end, I'm even going to give you access to my step-by-step business credit building guide. It's also known as the Business Credit Building Bible because it's downloaded over 1 million times and used by that amount of people to successfully build business credit. So we got a lot to cover. So let's dive in. Well, by the way, Mike is in the house from St. Louis. Thanks for coming in, Mike. If you're just coming in, give me your company name here in the chat. I'm going to give you a shout out on the stream, and like thousands of people see this. It's like free marketing, free publicity. Okay, so a lot of reasons you're going to want to have business credit. And let's dive right into one of 8, which is that it separates your personal and your business credit. Now, if you look at SCORE or Inc. or Entrepreneur, this is the main reason that they all tout as the reasons you want to build business credit. Because what we want to do is we want to separate our personal and our business credit. A lot of reasons for that. Here's one of the most important. 30% of your consumer FICO score is based on utilization. So if you get credit cards that report over here on personal credit, the problem is as you use those credit cards, you really damage your personal scores. Now, there's this myth out there that anything over 30% utilization hurts your score and under it doesn't. That's not true. The reality is the way the FICO score works is any use of credit cards will lower your scores. The higher the balance in relation to the limit, the more damage to your score. But I literally have seen people put $100 on a credit card and lower their scores over 100 points because they didn't have a lot of available credit to begin with. And it prevented them from getting a mortgage. I mean, it literally cost them a month of time to get a mortgage. So again, when we think about this, 35% of our personal FICO scores payment history, how we pay our bills, 30% is utilization. So FICO is telling us that by keeping high balances on credit cards, you mathematically damage your credit score almost as bad as paying bills late. I mean, that's just the math of FICO. So we cannot have personal credit cards used for business purposes, although most of us do. A lot of us launch businesses using personal credit cards, and then we realize it's going to take a lot longer for the business to make money and cost a lot more than we thought to launch the business and get it producing. And then we carry these high balances. We maybe even go out getting more credit cards, and we severely damage our personal credit. Here's why this is a problem. You can use personal credit to get all kinds of loans and credit lines for your business, but not if your scores are bad. So if you are not separating your consumer and commercial credit, and you're using consumer credit cards or cards that reported your consumer reports to try to fund your business, which they were not designed to do, right? If you look at what SBA says, limits on business credit accounts are 10 to 100 times higher than consumer credit. Like our clients are getting $10,000 to $30,000 limit credit cards 1 month into the business credit building process. So these limits are really high because they're designed to support a business. Consumer credit cards, not designed to fund a business. So what happens is when we start to use consumer credit to fund a business, we severely damage our personal scores. We ruin our ability to use that personal credit for loans and credit lines that we could have got. And now we can't get them because we've damaged our score. So we need to separate this personal and business credit for a lot of different reasons, because business credit is designed for you to fund your business. You need it on a separate business credit report, Dun & Bradstreet, Equifax, Experian. You need to be building a history of paying your bills for your business, right? The same as an individual. You need to have your credit utilization reflect how you use it as an individual, not that it's trying to fund a business. Okay, we want this personal credit to be intact so we can get mortgages and car loans and signature loans and personal credit cards. And at the same time, the things we're doing for our business, the loans, the credit lines, and the credit cards, we want to be reporting over here on the business side so that our business has a history. Our business has a history of paying its bills. And this makes lenders and credit issuers more inclined to be able to give us money. So one of the biggest benefits of business credit is that it creates this separation between personal and business credit. It's why Inc., it's why Entrepreneur, it's why Forbes, it's why SBA, it's why Score talks so much about business credit and creating this kind of separation. By the way, Mo Green is in the house. Mo Green's got an awesome landscaping business. Thanks for coming in and saying hello. And we have Crypto Steph in the house. What's going on, Crypto Steph? Thanks for coming in and saying hello. So second thing you need to know about business credit and why it matters to you is that it provides better financing options. Look, business credit is used to determine by three things from a lender's perspective. One, should you be approved or denied? I literally have a stack of denials that we get from people that come to us to build business credit because they got denied for a loan because of their business credit quality. Okay, so this is happening more and more and more often. A lot of even equipment loans, equipment financing now is looking at business credit. Okay, I actually talked to somebody in the credit card stacking space. And they said, look, if somebody doesn't even have an account on their business credit reports, it's getting even difficult to get them a credit card. You are moving more and more and more in a direction where lenders and credit issuers do not want to lend to you if you do not have a business credit history. They do not want to give money to a business when the business has no credit profile and score. This isn't new for you and I. We can't go get a mortgage if we have no personal credit report. We can't go get a car loan if we have no personal credit report. But yet we're still out in the world thinking we can get business loans. It doesn't work that way. You need to build business credit because it's one of the factors that lenders are looking at to determine if you should be approved or denied. Second, lenders are looking at business credit profiles and scores to determine how much money you should be lent. Your business credit reports actually even have something called a credit limit recommendation from each bureau. The bureau, Dun & Bradstreet, is telling the credit issuer how much money to give you. Now, I pull up a lot of business credit reports and review on these streams, and I've shown ones where people have credit limit recommendations of $725,000 and others have $1,000. You don't want to have a credit limit recommendation of $1,000. You want to have $725,000. But the more accounts you add to your business credit reports, the higher that recommendation will be. So what we want to do is we want to keep adding accounts to our business credit reports, getting credit with creditors that report, because what that does is it raises their credit limit recommendation, and that means credit issuers are more inclined to give us higher and higher and higher approval amounts. So if you've ever tried to get a loan, a credit card, or a credit line for your business and you didn't get as much money as you wanted to get, or you got denied, business credit is probably a factor in that. Now, the third thing that lenders look at is the rates and terms you will pay. Okay, so are you getting financed for a year, 2 years, 15 years, or 30 years? I'm going to give you an example from my life today. Okay, today I just got approved for a loan. The term is 15 years. That's my term. I have 15 years to pay that loan back. It was $25,000, 4% interest, and my payment's $197 a month. Now, at the exact same time, somebody else sent me a text message that was trying to spam me for a revenue lending loan, and it's only a 2-year term. So think about that. The payment on a 2-year term versus a 15-year term could be 5 times or more. So that's the thing. It makes it unaffordable if our term is very short. And a lot of financing right now is very short-term financing. 1 year, 6 months, 18 months, 2 years to pay it back. We want 10-year term, 15-year term, 30-year term. We want terms that are far out and lower interest rates. We can't get that if we don't build business credit, because the lenders that issue these kind of loans are looking at business credit and require business credit in order to be able to get approved. So if you are getting not as many approvals as you'd like, or you're getting approvals, but the term is short and the interest is high and the amounts are smaller than you want, business credit is your culprit. You need to build business credit because it's what helps you get more approvals, better terms, and higher approval amounts. It's really important. And by the way, Michelle is in the house with massive emojis. Michelle, thanks for coming in from Facebook. Michelle Taylor, it's good seeing you. Okay, so number one reason we've got to separate personal and business credit. Number two is that we need to get better financing options for our business. Number three, it is our credibility. Okay, business credit is available to anybody that wants it. Anybody that wants to pull your credit report can pull your credit report. I was on a podcast and I was talking to the host about this. I said, hey, I can pull your business credit report right now and go over it with you if you'd like. And they're like, well, let's wait. You could tell they were a little shaken up. Let's wait till the interview is done. They were shocked that that could actually be done, that anybody could pull their business credit reports and scores. And you absolutely can. As a matter of fact, if you go to Experian, Equifax, or Dun & Bradstreet to get a business credit report, the very first question they ask you is this report for you or someone else? So they expect that you're pulling business credit reports for other companies to assess their risk. So your business credit reports are publicly accessible. Your prospects, your clients, potential investors, lenders, credit issuers, people who want to buy your company, they are all looking at your business credit reports to make important decisions. As a matter of fact, I actually teach and provide education to the 3 biggest companies that teach students how to acquire businesses. And the reason I am part of those organizations is I am teaching their students how to read business credit reports to make the decision on whether they should buy a company or not. So these are the things you don't know. Behind the scenes, your prospects, your clients, lenders, credit issuers, insurance companies, potential investors, people wanting to buy your business, they are all pulling your business credit reports to make decisions about you, and you don't even realize they are. As a matter of fact, if you ever watch a show called The Prophet, Marcus Lemonis, I've seen him once go back to his hotel and go, something didn't seem right about what that owner told me, so I pulled his business credit report. He came in the next day, confronted the owner about what was on the business credit report, and decided not to invest in the company from what he found. That is what's going on behind the scenes. So you need to make sure that you build a business credit report and score because it is your reputation. It is publicly accessible information. So if your report doesn't make sense, if it has industry NAICS codes that you're not even in, and incorrect address, phone number, websites on it, like it commonly does, those things have to be fixed. You have to correct that information. You don't want anybody out there to access credit reports stating that you have no credit or that you don't pay bills for the credit you have. It is your reputation. But here's the good side. If you treat it as such, then what you're going to realize is it becomes way easier to get merchant accounts. It's easier to get loans and credit lines and credit cards. It's easier to get insurance policies. You don't even realize how many people are pulling your business credit reports. And when you have good business credit, you start to realize that, and the doors start to open up just to make all these type of financial services you're trying to get easier to get, because you might not recognize that they're actually using your business credit reports and score to basically look at your general credibility. So reason number 4 that business credit really matters is because it improves cash flow management. Of all the benefits of building business credit, it's one of my favorite. So how does it do that? Well, let's look at it. When you make purchases, right? This month I might spend $100,000 to make purchases. Well, how am I going to make those purchases? I have options. I can either pay cash, right, or use a debit card. It comes right out of my bank account like a lot of business owners do. Or I could put it on a credit card and then I could pay it off before interest accrues or let interest accrue on the thing. Or I could take money from a loan and use that to pay it, right? There's other ways, but these are the most common methods that you're going to use to pay a bill. But every time you take money out of your bank account, it reduces the amount of cash you have available. Business credit gives you more flexibility. It lets you actually do your normal spending on credit cards, and then you can still pay it off before interest accrues, and it still costs you no money. But this lets you keep cash in the bank longer to use for other things that you may use it for. Hey, I may go spend $20,000 out of my bank account to pay a bill, but then I might have an opportunity to actually put $20,000 down this month to acquire a business or to do something else that I think is going to be a fantastic opportunity. Somebody may come to me and say, hey, we've got this dormant radio space that's not being used, and I wanted to see if you wanted to pay $5,000 this month to be able to go and get this radio space that's not being used. As a matter of fact, I'll give you a perfect example. We have an opportunity that we're working on this new piece of software. We just got the quote today, $5,000 to build this piece of it. Well, I might go, I don't have the $5,000. Well, I don't have the $5,000 because I keep taking too much money out of my bank account. But if I'm using my expenses on credit cards, now I have a choice. And that's what cash flow management is about. It's about having a choice. Now I have a choice. I can either say, okay, I'm going to wait to get that software till later, or I can go put that $5,000 on a business credit card, or I can pull the $5,000 from my account because my other expenses have been paid for my business credit cards, and then I can choose to pay it off before interest accrues or let interest accrue. But the bottom line is I have a choice. And that choice allows me the opportunity to take advantage of more opportunities, right? It allows me to not push things to the side and wait to do things that I'd like to do now or can give my business a boost now because I don't have the money available to do it now. And this is why we want to keep as much free cash flow as possible. We want to keep as much money available in cash as we can. It's okay to be able to put money on expenses on business credit cards and then pay them off before interest accrues. It doesn't cost us anything. And if we decide to leave some money on those credit cards, it still helps us have more money in the bank to take advantage of more opportunities. Success happens when preparation meets opportunities. But too many times as entrepreneurs, we have the opportunities, but we're not prepared to take them. And that's exactly what business credit allows you to do. It frees up this cash flow so you have the opportunity to take advantage of those really cool, unique opportunities when they come up, because you're not taking all of your money and spending it on your expenses. You're spreading it out on business credit cards, giving you the flexibility and ability to be able to take advantage of those opportunities when they come up. And by the way, Pauline is here from Odudu LLC in Oregon. Thank you very much for coming in and saying hello. And Mo Green's already given us 5 stars. I got to appreciate that. And thank you very much for coming in, Pauline. I appreciate you saying hello. Okay, so number 5 on the list of 8 benefits that business credit provides you is that it prepares your business for growth. And what I mean by that is that you don't want to wait. I used to own a mortgage company, and so many people would come to me with really bad credit. And I would look at them and I would say, why have you not addressed this? Because this is from years ago. And they said, well, I thought that if I just let it sit, that because it was older, that my credit would be okay. And I'm like, well, that's not how credit works. Like, if all you have is bad credit, all you have is bad credit. Even if it's from 5 years from now or a year from now, it's still bad credit, right? So what we want to basically do is with business credit, we want to make sure that we're preparing our business for growth. We don't want to wait until last minute when we need it to start building it, right? If your consumer credit's bad right now, fix it. There's plenty of credit repair companies out there that can work with you to do it. Start building positive credit. Don't ever let it sit. Same thing with business credit. You don't want to just ignore it till you need it, because then you need it. So many people come to me with $3 to $10 million companies, and their credit lines are pulled, and their lender won't loan, and they're trying to get this amazing opportunity, and they're freaking out. And I'm like, well, you don't have any business credit established. Well, what do I need to do? I'm like, you should have started this 10 years ago, 5 years ago, a year ago, not now, but let's get you started now. And now there's something they really want. They want to get a commercial building. They want to take advantage of an opportunity, but they can't get it because now they have to wait to build their business credit. Don't do that. From the minute you start a business, you should start building business credit. And what this allows you to do is it prepares your business for growth, because you're prepared for credit and financing opportunities when you need them. Now, when I need to get something, when I need to take advantage of something, I know I can go confidently get the money that I need to go do that thing. And that thing could be all of the opportunity that you need to make your business worth more money, to make it grow faster, to get you one step closer to that financial freedom that you deserve to have. So you want to make sure that you're prepared for business growth. And by building a credit profile and a credit score for your business, when it comes time to use that to get insurance or to get loans or credit lines or make major purchases, well, then you're able to get all that stuff because you prepared your business for growth by building that business credit profile and score. Now, Mo Green says, hey, when reestablishing a business, are you considering it new, or can the credit score points roll over or lose that old point score? Well, first of all, reestablishing a business is fine. If you still have the same EIN, then that credit profile is still there. If you shut down the business and open it under another EIN, you lose the credit profile. So if you've had a business that's sat dormant, maybe you didn't file annual reports or do anything with it for years, you're completely fine. But again, you want to start rebuilding. You want to make sure that you're constantly building credit for that EIN. So Mo Green, great question. And the reality is if you didn't shut down the EIN and didn't shut down the entity, you're fine. If you still are using the same EIN, the credit profile is linked to that EIN, you'll be 100% fine. Okay, so that's number 6. It protects your personal finances. Look, there's this thing called personal guarantees. And what a personal guarantee is it means that I am liable for that debt that I am signing for. Now, let me tell you, personal experience, how like somebody comes and cleans out your bank account. Worst case scenario, let me tell you what happens. I lived it. I personally guaranteed a Bank of America credit line back in the day before I knew what business credit was. This is the reason that I started teaching about business credit. Okay, guaranteed a Bank of America credit line. Mortgage crisis occurs, shuts down my mortgage company. I did jumbo loans, $1 to $3 million loans. Literally overnight, it went away. But what I did didn't even exist like that. Nothing to do with me. Wasn't a bad entrepreneur. Had credit and cash and everything available. Did everything the right way. But the business still shut down because what I did went away overnight. And I didn't see it coming. Maybe very few did, but most of us didn't see it coming, right? So now I guaranteed this credit line, and Bank of America came in and cleaned out my bank account. They took everything. They waited till I had the most amount of money in there, and then they took it all. And then all these checks bounced, and I had negative bank accounts, and I was in check systems and couldn't open more bank accounts. The whole thing was a freaking mess. Okay, so this is what happens when you personally guarantee a debt. You are personally liable. You are saying, I give you permission to come after my personal assets, my stocks, my bonds, my bank account, my real estate, my vehicles, whatever assets you have. You are telling a bank they can go after you to get it. And we don't want this. As business owners, running a business is risky enough. The statistics are not on our side. Most businesses fail. And as good of entrepreneurs as we think we are, okay, a lot of us that build successful businesses, we think we are better entrepreneurs than we even kind of are. We think it's easy to do, and then we realize it's not easy if we open up another business, right? So the reality is that we don't want to be personally liable for what happens in our business if we don't have to. Well, how do you get away from personal guarantees? How do you get it where you don't have to be a signer? The business can stand on its own without you as a signer. Well, that's exactly what business credit does. So if we look at Michael Dell doesn't guarantee debts for his company Dell, right? Why? Because if you look at Dell's credit reports, they have hundreds and hundreds of trade lines. They've shown that they've paid back hundreds of millions of dollars in previous debts. So lenders and credit issuers will lend Dell, the company, money because Dell, the company, has this vast credit history of paying its bills. So here's the thing. If you don't have that history of paying your bills, lenders and credit issuers are going to default and ask you for a guarantee because your business can't stand on its own. What we want to do is build a credit profile and score for our business so our business can stand on its own. Now, don't get me wrong, okay? You're still going to need to probably provide personal guarantees for SBA loans and some other kind of financing that's out there. But a lot of credit, a lot of financing you can get without personal guarantees if your business credit is well established. Because now your business can stand on its own. Now your business has a history of paying its credit. A business has a history of paying its bills. So now the lender doesn't need to come and look at your personal history and use you as a signer because they can see that the business has a vast history of paying its own bills. So if you want to get away from personal guarantees, there's really two ways to do it. One, you have assets that you could pledge as collateral. A lot of asset-based lenders won't require guarantees. And the option two is you build business credit, and that alone can get you away from a lot of guarantees. You should never need to provide a guarantee on a credit card, period. Every credit card you get for your business, you should be able to get without a guarantee. And business credit makes that happen. Business credit alone can get you every kind of credit without a guarantee. And as you build business credit, it will even make it easier to get financing without a guarantee. Although keep in mind, some kind of financing like SBA, you're probably always going to need it. Okay, so that brings me to number 7 on the list of 8 reasons on why business credit is so important. Okay, and that is it opens up new business opportunities. Look, I never even saw this one coming. One of my clients, Christine, taught me this. She owns a trucking business. And in her testimonial, she said something I never expected her to say. She said, look, when by building business credit, we started getting approved for a lot more contracts. And so I said, Christine, what did you mean by that? She said, look, here's what happened, is that as a trucking company, we bid on contracts all the time. We get some, we don't get some, right? She goes, but as I started to build business credit, the percentage overwhelmingly changed. I went from like 20% of being able to get the contracts to 80%, meaning everything I'm bidding on now, like 8 out of 10 I get, and it used to be 2 out of 10. I'm like, okay. She goes, well, I asked them why, and she said that my business credit was a factor into that. She didn't know that the companies she was bidding on for these opportunities were pulling business credit. And because her business credit was good after we helped her establish it, now all of a sudden she started to get approved for all of these contracts when she didn't even think that business credit was a factor in the approval decision. So this is one example. So many government contracts and agreeing contracts out there from other providers, they're looking at business credit to make all kinds of decisions about you. So it opens up new opportunities. It opens up your ability to get those agreements, to get those contracts from government or even other companies, because again, your business credit is your reputation. So when they see that your business is actually credible, then you're able to actually be able to go in and successfully build business credit and get approved for those actual contracts and agreements as well. So it opens up these kind of new opportunities for you to be able to get more business into your actual company, to be able to get more contracts, amongst other things. That brings me to number 8. It equips you for emergencies. Businesses fail because statistically, they don't have the cash flow to deal with whatever comes up. The economy changes, COVID hits, right? All of a sudden they have any number of different things. I was talking to my buddy Leo, who owns an 8-figure e-commerce business. And I said, what's the worst experience that ever happened? He goes, we had this company where all these orders were coming in and the company wasn't delivering. And all of a sudden we got like $150,000 in chargebacks. It almost put us out of business. So this kind of stuff happens no matter what industry you're in. These unexpected things happen. Chargebacks, cancellations, you lose your best client, the economic climate changes, right? Any number of different things that are completely out of your control happen. And if you're not financially prepared for that, then all of a sudden you're out of business. That's what happens. You lose your cash and you're out of business. So what has to happen here is you need to be prepared for the unexpected. You need to be prepared for emergencies. And business credit helps you do that. It helps you manage your cash flow and keep more money in the bank until you actually want to pay off the amounts that you're putting on credit. It helps you keep more credit available. Look, I'm a financing guru. I've been doing this thing for decades. So a lot of people ask me these kind of questions about when to get money. And my answer is very simple. Anytime you can get revolving credit, get revolving credit. If you can get credit lines, if you can get credit cards for your business without personal inquiries on your credit report where it would hurt you, do it, because it ain't gonna hurt you to have all this credit available when you need it, right? It's better. And if you're using this credit sporadically here and there, that even expands your credit history and helps you get even more money without personal guarantees and credit checks. So always make sure that you are getting as much revolving credit as you can possibly get and use that credit as freely as you can potentially use that credit, because that is going to build that credit history and score, and it's just going to have more credit and money available for you to navigate the unexpected, for you to be prepared for emergency. So let's recap these 8 reasons that we need to know about business credit and business and why it is so important. Rule number 1, it separates our personal and business credit, right? It helps us not get credit cards that report to personal credit reports that hurt our personal credit scores when we use them. Number 2, it gets us better financing options. Lenders are using business credit to determine if we should be approved or denied, how much money we should get, and the rates and terms we should be approved for. Number 3, it's our credibility. Business credit reports are publicly available by anybody that actually wants them. Prospects, clients, competitors, all of them, insurance companies, they are all looking at our business credit reports and scores, so we need to have a good reputation. Number 4, it improves our cash flow. It gives us the ability to pay cash for things or pay credit for things or pay off the credit before interest accrues. It just gives us better cash flow and helps us keep more money in the bank because we don't have to use our credit. I don't know what I'm doing right now. I don't know what this is. I don't know. So don't judge me based on this. But I'm saying, and it actually gives us like this ebbs and flows, right? It lets us, take money keep money in our bank account. And then we might take a little bit and pay off some of the credit. And then we put more money, we accrue more money in the bank account. It just helps us kind of with these ebbs and flows by giving us flexibility to manage cash flow because we can keep more money in the bank and use credit to pull us through. We can even pay off that credit before interest accrues. Number 5, it prepares our business for growth. By building the credit profile and score, when we need to get a loan, when we need to get a credit line, when we need to get credit cards, we can because our business credit is so well established. Number 6, it protects our personal finances. It helps us get away from personal guarantees and helps our business stand on its own. Number 7, it opens up new business opportunities. A lot of people are making judgments on us based on our business credit history, including contracts. So if we're bidding on contracts for companies or even the government, it helps us get approved for those contracts. And number 8, most important, it equips us and prepares us for emergencies. It's all going to happen. The economy is going to shift. We're going to lose our biggest client. We're going to have an AC unit go out in our building, some other unexpected expense. Some employee is going to run off and steal all of our stuff. Okay, a lot of bad stuff can happen to us in business. It's going to happen. It's inevitable. It's not even a matter of if, it's a matter of when. And business credit prepares us for those opportunities. So Evan says, hey, where can I get a business loan? Really simple. Go to creditsuite.com/get funding. That's creditsuite.com/get funding. We deal with over 1,000 different funding options or lenders and have over 100 different funding options. So if you go to creditsuite.com/get funding, then that gives you everything you need to actually get approved for business credit. You can scan this right here and they get it for you. As a matter of fact, if you actually do schedule a business financing assessment, you can get this, by the way, at creditsuite.com/consult. I'm going to tell you something brand new that's taking place. We just rolled out our brand new Fund Smart AI. And our Fund Smart AI looks at every legitimate type of business funding that exists today. And when you talk to our team, they take your info, they put it into FundSmart, and FundSmart says, here's a report, a PDF report of every kind of funding product you can get. Here's the credit cards, here's business credit recommendations, everything. Then we physically give you the PDF report. We give it to you. So actually, if you go to creditsuite.com/consult, you even scan this, then we can absolutely get you approved for funding. We'll run you through our FundSmart AI, give you a report of all the funding you can get. You can click through to actually go through to the sources to get approved. Credit card recommendations, business credit recommendations. We'll even help you get a free copy of your Dun & Bradstreet report and score and go over that with you as well. So hopefully that answers your question, Evan. All right, thank you very much for tuning in. Don't forget, get your free Dun & Bradstreet credit report and score, and get your free FundSmart AI funding report of all the funding you can get now. It all happens at creditsuite.com/consult. And if you got value from this training, make sure you like and subscribe to keep your eye out for our next training. We're talking about more cool ways to get the money you need to start and grow your business. Take care.